to see a bout of a rally. Let's assess the charts then. Nikunj on the wall with Kunal Bothra. Over to you, Nikunj.
Right, so let's look at that. We're using the word little, which is that markets are doing little on the upside, little on the downside. But after this patch of consolidation, are we likely to have a last hurrah before the year ends, or it's goodbye to a new high for this calendar year? So Kunal, on a scale of 1 to 10, what are the chances that we've made the high for the year?
So I think if I assume that the highest rating at the highest number is 10, then I think almost 8 or 9 is where we've made a high probability that we've made a best high for the index so far this year. Now the data point which actually suggests this kind of a understanding is we've looked at the RSI reading on the monthly charts, which is a much more broader indication because it tries to absorb all the phases of market moves over the last 20 years for indices, and then mapped it up with the Nifty price performance. Now, interestingly, that whenever the RSI for the Nifty has crossed about the 80 levels, we call it a zone where the indicators or the index is overbought. But that doesn't necessarily mean that the index would keep on correcting. We wait for a phase where the index or the RSI tops out and falls below the 80 levels. Historically, we've seen that whenever that has happened, it's actually led into 3 months or at least 6 months of the markets going into a phase of correction/consolidation. Now, just to give a very recent example, 2021 was a phase. This was the recent charts for 2021. The Nifty RSI crossed about the levels of 80. What followed was a 6 months of painful time-wise, price-wise consolidation for the index before we managed to gain momentum and come back again on the upside. The second and the most interesting part, Nikunj, is that we looked at the market breadth, and that's the best way to try and analyze the index trends. In this last leg of sell-off, the 10 days, 7-8 days of sell-off, only 7 stocks or 8 stocks were below their 200-day moving averages. Okay. Then followed a bounce, which we ideally believe that if it's a bounce which is very strong, then the number of stocks should reduce. But the number of stocks have actually increased of these stocks going below their 200-day moving averages. So that's another indication that the market breadth is deteriorating. And when we see a rally after a bounce, after a sell-off, we actually expect the market breadth to improve. If that deteriorates, it's indicative that the markets are going into a phase of consolidation and not ready for a big breakout.
So what could be that range? 24,000 to the previous high 26,000. Could that be the range for next 3 months now?
Yeah, the broad range when we look at this, so 25,000 should act as a pivot and we should swing 1,200 points plus minus that range. That's the ideal range for the index.
So 25,000 is the line in the center.
Yes.
1,100 points here and 1,200 points on the upside.
Correct.
So it really could be, like I said at the beginning of this conversation, little of nothing, little of downside and little bit of upside.
Yeah, absolutely. And 3%, 2% swings on the indices are natural course of price action. It's not something to fret about or to worry about. It's a natural phase of the markets going into a phase of consolidation and correction.
And which is actually healthy. But the fact that optically Kunal feels that we've topped out for the year, you may not like it, but that's the way markets are. I think they're getting into what is called as a healthy consolidation move. So mentally, just draw a line, 27,000, 25,000 on the Nifty. Worst case scenario could be 1,500 points from 25,000. Best case scenario could be 25,000 above 1,500 points from 25,000.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.